keep asking questions on behalf of some of my clients that I work with. So when we're talking about the grants and the down payment assistance, I just want to make sure I'm clarifying and separating the two. Even if you're getting down payment assistance or utilizing a grant to purchase, that doesn't cover. Miss Alfreda, you have a question?
No, no, go ahead. I'm listening.
Oh, okay. That doesn't cover like your binder, your appraisal fee, your inspection, and all of those things. Those are still considered out of pocket expenses. None of the grant that you offer covers those items either.
Right.
Okay.
Right. Yeah. You have to have skin in the game, as you like to say. Um, you're gonna bring in your funds. So a key thing, and a good thing you said that, because I meant to say it too. A key thing in qualifying for a loan is your savings. And thank you for saying it, because I completely forgot about it. Your savings. You do want to save money, even if you're going to get a grant or a down payment or anything. You do want to show the bank that you've saved money. There's times when a customer has a 600, like right on 600, 605, and they still can't get qualified, even though the minimum for FHA is 600. It's because they don't have any assets. Now, if you took and put in there, this person has $10,000, they get an approval. Now, the reason why is because we are packaging the loan for either FHA, conventional, or VA, and we do not want there to be a foreclosure. Foreclosure is bad. Not making the first payment is bad. So the idea is to make sure we're packaging a good customer. What makes you look good is your credit, your income, but also the savings that you have. If you have $500 in the bank, that's better than no money in the bank. You know, so start small and set a small goal as it pertains to saving money. Let it be $100 a month. I mean, it may take you, 12 months to get the home or be ready to buy a home. That would be $1,200 more than you had if you didn't do anything at all. So that shows how serious you are, especially when I know let me talk loan officer stuff. As a loan officer, we have to battle sometime for you. We have to go to bat. I mean, the underwriter's trying to protect the company's interest. They're also trying to protect themselves. Protect themselves meaning when they sign off on a loan, their license is on the line. They're in more trouble if you foreclose than you are technically, because now they can lose their job. This is their livelihood. So they're wanting to make sure that they are doing a good job and not being scrutinized and audited for giving someone a loan that ended up being a foreclosure. So that's why sometimes it's harder for one person to get qualified than the next. You have a person who has only $300 or $400 in the bank, or $1,000, say for example. You have another customer who has $4,000 in the bank. The one with $4,000 may breeze right on through, whoo, because because right on through. Because at the end of the day, we know you'll make that first payment. We know you'll make that first payment. After the first payment, if it goes 6 months and then it's a foreclosure, that's totally different than 2 months foreclosure. That's totally different. So the idea is, if it's a little risky, meaning your score isn't as high, then we can fall back on the fact that you have some savings, and we can say, okay, we get you approved. Now, just because you go through some work and they ask you for documentation, it doesn't mean you're not going to get the loan. They're just making sure they're crossing T's and dotting I's. And they say, you know what, we have this paperwork in the file, we have this paperwork in the file. We did everything possible to ensure that this customer, was going to be a good customer. You have things on your bank statement. Let me talk bank statement right quick. You have things on your bank statement that says, as soon as you get the money, it's gone. I'm gonna I'm gonna keep it real with you. When you have to give your bank statements up, because you will, people will look at your bank statement and try to make a decision based on what's going on with your bank statement. I'm here to tell you it's the truth. They say give me your last 2 months bank statement. If you show your checking account, and I always try not to get checking account. I try to get savings account all day, every day. But if I gotta do checking, I gotta do checking. But I try to do savings because savings typically should be putting money in there and letting it sit, Now, sometimes you have bank account that gives you both statements. Like you'll have checking and savings on the same statement. We can't help it. Then we're gonna see your checking. But keep in mind, all that is scrutinized. You could have a 680, but then as soon as you get the money, it's gone, and you're not holding any balance. You're going down to zero. Forbid if you have any NSF fees or charge-offs or any type of overdraft fees and stuff. That's going to be a killer, right? That's going to be a no. Oh, we can't do the loan. Can't do the loan because you are not showing responsibility. So if you are 3 or 4 months out, think like you're 3 or 4 months out. The worst thing you can do is just show up. I'm here. Let me get a loan. Start off now before you make the phone call. You might be working on paying off your debt. You're paying off your debt and you're trying to save money. You're making sure you don't have any leaks, no collections. We've had deals that get killed because they got the credit pulled, and remember I say 4 months, and then 3 months go by, they found a home. Woohoo, they found a home. Now the credit report is about to expire. So we got to pull the credit again. So 3 months have gone by. They either bought something new, they got a collection, something happened in those 3 months that now they don't qualify for the loan. You don't want that to be the case. We talked to you 3 months ago, you had $5,000 in the bank, $6,000. I said keep on saving. But you went on a birthday or whatever the case may be, and now you have $1,000 in the bank. It doesn't go well together. It doesn't go well. Keep in mind, you are walking into the bank. I know we don't really do this, but you're walking in the bank and saying, give me whatever that price of the house is, and they're giving you the cash money. Imagine that. You're not going to get it. You're not going to get it if you think about it like that. And I also use this one, which is, think about it like from somebody asking you for money. Somebody say, hey, can I get $10,000? How would you look at them, right? you would be scrutinizing that person. You'd be like, okay, who is this person? When was the last time they owed somebody money? How did they act when they owed money? I called them, asked them my money. Some people ask you for money again and never paid you back the last time. You see what I'm saying? I go on and on and on. Go ahead.
Okay, so we have a question in the chat.